Bobby Chino. Bobby, I've been traveling all day in an
Yep.
airplane. I had internet. I'm now at the beautiful Hilton Tapatio Cliffs in Phoenix, Arizona, where I'm speaking at an event tomorrow. AgView Solutions is the name of the company, agriculture conference. But anyway, it's a slight little plug for them. It seemed to me today, stock market rallied hard, could not keep its bid. We are sitting precariously above all-time highs. We need some time to consolidate above there. Is the week and the weekly close a big deal? Do you think we're going to crack if we crack below it?
I don't. It's going to take a couple of weekly cracks or weekly lows, new weekly lows to crack. I think you could get a little bit of a pullback, but I think it's also due and healthy given what's happened. We're now the intraday high we got today, which is another new all-time high, 6.07% over the old intraday high. That's a pretty substantial level. So unless we get below the old intraday high, by the way, we're going to be about 6.5% above the old intraday high close as of today. But we're certainly losing our bid. And the interesting thing is Treasury started rallying. Treasury started off negative today on the yield side of things, not the price. And then the yield started rallying. And last I looked, the 10-year went from like 412 to 418, which is not a big move, but it was in the opposite direction that it was going this morning.
That is interesting. Okay, so as I've said a million times before, you can think that Bobby and I are full of shit, but you cannot argue the fact that cannot argue. You can, you just be wrong. The fact that we get good guests. We are now going to bring in Tony Greer, who's the editor of the Morning Navigator newsletter, and we're excited to have him on. Let's bring on Tony.
Hey, can I have the first question, Jim?
We have kick-ass music, too. What'd you say, Bob?
Can I have the first question?
Damn straight. Wait, can't I say anything?
Don't you agree they should reverse us in that?
No,
I'm
more important. I should be higher
than Jim. I mean, everything from alphabetical order, everything. I should be higher.
A meeting could take place about that. I hear you. I'm not going to get involved, but there could be a meeting over that for sure.
We'll send a memo. We'll ping you back. We'll circle back. We'll figure it all out. People, it's so funny. People, like, Twitter, people think of it as this, this weird wasteland. I think you make some really cool relationships, and yours and mine is one of those. We've had a lot of great discussions over the year. I'm so glad we get to see each other face to face. I feel like your friend. Thank you for all that. You put great contribution for that.
Same. Thanks for always putting it out there, Jim. You're one of the people that I admire, and that I know that I would instantly want to have a beer with a guy like you, just because I know that you're talking from the hip, and that's what I appreciate.
And you know that I also like to stir it up a little bit, and we're gonna have a little fun, and that's what we do. There's nothing. It's supposed to be exciting and fun. And you're supposed to be able to say what you think and let people slug it out. I think it's great. So where are you coming to us from? New York?
Yeah. I'm sitting here a little barrier island off of Long Island called Atlantic Beach, and crappy weather heading into the winter, but that's okay. We're indoors facing the markets,
Yep. Bobby?
Yeah, I don't have anything to say about that. It's cold. I don't know why you guys still live in the cold. It just makes me nuts.
That's a great question. That's not going to last long. I'm 55, and it's wearing on me, man.
Hey, can I ask you
starting next year, I might be going to Florida for a little bit more of extended time.
I'm going to ask you a stupid question. Jimmy, you could chime in if you want to. Who do you get in terms of, you look exactly like fill in the blank? I can tell you who I get. I get the guy from, do you ever watch Supernatural?
No.
Okay. The dad, for anybody who did. Did you ever watch, what's it, Walking Dead?
Yeah.
The guy with the bat, with the nails in the bat?
I get that guy.
I get him all the time.
You both get that?
Tony. That's who I see. Yeah, for sure.
Looking guy.
No, I mean, I get if I had a nickel for every Robert Downey Jr. that I got, I'd be a rich man today. Maybe
I
not
think
as
that's
much as I
being
get older.
dark and with a beard, because I get that one too, and I just don't fucking see it. I don't see it at all.
Yeah.
No, it
I
is
mean,
what
who
it
do you
is.
get? You get
When
anybody?
I was younger, I got Bruce Springsteen because I had hair that was similar to his.
That.
Like a profile. He's got kind of a big nose too. And I don't think it never considered any great compliment. I don't think he's the world's greatest looking guy.
One time I got the guy from Billions, the bald guy.
Who's
Funny.
What's his name? Anybody know his name? He was also in Sideways.
Oh, yeah, Paul Giamatti. Oh, you don't want that at all.
He's the most unattractive human being, clearly next to myself, because somebody actually told me I looked like him.
You know why I don't watch Billions, by the way? Do you guys know?
I
Can
don't
you
either, but go
piece
ahead.
it together,
I
Tony?
don't either,
Because you
but
know
go
who the
ahead.
executive producer is of Billions, the guy creator?
I don't.
Freaking Andrew Ross Sorkin.
Okay,
You
there
know,
you go.
my
Perfect.
18 years at CNBC, and he was there for about 10 of them. He never said one nice thing to me the entire time. Like, and we'd talk, we'd have conversations, and he just was always a jerk to me. And I think it's such a New York centric, like you fly over state people, can, you know, and I don't know. I'm not gonna spoil. Unless, by the way, if you're watching our show, Andrew, an apology goes a long way, maybe. So give me a text. I think you have my number. Anyway,
I
so
know we're supposed to be talking to Tony here, but can I tell you the last thing that Andrew Ross Sorkin ever said to me? I made mention of, and I don't remember what it was, but it was a market situation that hadn't happened in about 20, 25 years. And I mentioned how a lot of people who trade now and a lot of CFOs have never actually lived through this kind of a situation. And he goes, yeah, but they can read a book, Bob. I wish we all knew as much as you. And that was what he said. I'm like, I'm done. I am done.
He's
He's
just
a
such
jerk.
a pompous ass,
Yeah,
and
he's a
he
pompous
comes. But anyway, we have Tony Greer here. I don't know if you noticed, Bob, and people who are watching. So we'll let him talk maybe a little bit too. You said in your note, which I love, by the way, you're bullish stocks. I think I'm bullish stocks too. Can you give me your fundamental case, or is it a technical case?
Yeah, let me frame it, Jim, if you don't mind. I came out bullish for my readers on the Navigator on November 14th, right? That was the day that we got October's PPI number, CPI number, and it was in line, and the stock market took off like a bat out of hell. The dollar curled over in large magnitude. Treasuries rallied in large magnitude. There were 17 sectors of the S&P that had 2 sigma rallies, most of them through resistance levels. So that was my key, that the bond market decided that inflation was going to no longer be considered an issue in any way, shape, or form, that we probably have found the high in yields in the short term, and that stocks are going to like that going forward. So that's been the premise since then. And if you'll notice, if you look back at the next couple of consecutive CPI reports that we got after that, very similar reaction, right? We got inline data, CPI not a threat at all. Stock market loves it. Bond market rallies. So to me, those are the signs. Those are things that I'm looking for. I'm looking for the Fed to sort of have a tough time lowering rates this year. They're certainly not going to go up, but they're going to be sideways to lower. And to me, that's a scenario that's amazing for stocks. Getting above 48.50, that little double top that we carved around the turn of the year, that was big. We were talking about it a little bit before on air. Today's pullback is, maybe an interim, low grade top. But what's interesting to me is that we've seen along the way up here, we've seen several reversal days in the S&P that have had no follow through on the downside. And
Amen.
So,
Amen. Yeah.
right? Like I look at a day like today where we close unchanged after punching a lot of room on the upside, coming back to unchanged. Is that a disappointment? Absolutely. It's a disappointment for the bulls. But then you look at the leadership today, and they're still, big tech is still rallying. Semiconductors are still rallying. NVIDIA is still breaking out. I mean, those are the drivers to the market to me. And I'm not going to be the one that picks a top on where AI or NVIDIA is going to level off. I lived through the dot-com bubble, and I've seen valuations go batshit crazy. And it feels like we're set up for one of those times.
So just before bringing it, Bob, I just want to say the NVIDIA thing. Thank you, Nancy Pelosi. Me getting into NVIDIA like a month or whatever it was ago was kind of a joke. It was just like so I could say that I got in because Nancy Pelosi got in, and I've gotten out a third of my position, and it has been wildly successful. I'm not voting for you, Nancy, but thank you for that, Bobby.
Take the inside information and use it, Jim. Absolutely.
Yes.
So Tony, I want to bring something up from a friend of mine, actually somebody who just moved down here from New York. Let's call him John D, because I don't have permission to use his full name at this point. I'm actually getting a drink with him right after this, but he saw you on Real Vision, okay? And he came away with he has the same sort of view as you do, and he made a comment in our conversation this morning when we were talking about you being on the show. And he said that the current environment cannot handle a 5% 10-year. And while I agree for any number of reasons, I find that whole statement a little strange when you're as old as the three of us are. Jimmy and I are about 4 years older than you. And I look at it like, man, my second home, I was thrilled to get 6 3/8. Like out of my mind thrilled. By the way, this can go to either one of you. Why do you guys think, I know why I think it, but why do you guys think that the market can't handle a 5% 10-year, or don't you think that?
Tony, you go first because I got an answer for that for sure.
Okay. I'm not gonna necessarily, jump on board with that, right? We just had 5% in the 10-year not too long ago. Stock market wasn't that much higher, lower than it is now. So I feel like if the economy is not dumping over into a recession and we aren't just fighting that inflation headline number, then maybe the market can handle 5% in the 10-year. And at the same time, I'm not saying that it's going there. It doesn't seem like we're going there, but I don't know. I feel like the stock market can handle a lot of different interest rate levels depending on what the economy is doing. And that's kind of my spin on where rates are versus the stock market. That's kind of a triad for me. So if that's a fair answer.
So my answer is slightly different. And again, the people who know Bobby and I's work and Tony's work. So, I trade, and to trade, you got to be kind of in the middle. But when you're in media, you got to say they can't handle a 5%. And I hate the hyperbolic nature of the media thing. So I'm going to say this. I don't think the market can handle 5% 10-year, 5% even on the short end. And here's why, is that I believe that over the last 30 years, rates being held inorganically low created an environment whereas different governments at every level, local governments, saw companies making money and wanted to get their taste. They increased regulation, they increased taxes. It's almost like a punishment of companies that are making money. Now, the rates all of a sudden spiked back up, and I fully understand that it doesn't seem to have given any effect yet, but I think part of that is duration insulation, which we've covered that topic a million times on this show. Don't need to go over it again. And I think the long and variable lags that Milton Friedman talk about sometimes are more long and more variable. And I think that they can't handle it because of the environment we've created. Does that at least make reasonable sense to you, Tony?
Yeah, I can live with that. I can live with a lot of explanations, Jim. The bond market is not always, the arch enemy of the stock market. And I just feel like a lot of scenarios are possible, especially in 2024 when we don't really know what's going to happen next.
Yeah, quite the opposite right now, right? I mean, bonds and stocks have been correlated, like highly correlated, which is unusual, but it's been going on for a while now. I'd say at least 2 years where the correlation has been above the historical norms. And so to kind of follow up on this, you said as long as we're not staring at that inflation headline, right?
Yeah.
And I know where Jimmy stands on this too, but I'd like him to comment as well. We saw a bunch of manufacturing PMIs this morning. Now, they weren't the ISM, they weren't the big ones, but they were the small to medium-sized business. In Germany, they call them the HCOBs. In the UK, it's the S&P. In the US, it's the S&P. The Eurozone, it's the HCOB. Those manufacturing PMIs were all higher than expected and higher than last month. Also, Japan's as well. Now, the only one that turned into expansion territory was the US. Manufacturing PMIs correlate really highly to GDP. So do you, Tony, and then Jimmy, please, do you think that we can get an acceleration of the global economy without having to stare at the inflation number? Do you think it's possible?
Sure.
Tony?
Sure. I'm just going to say sure. And I'm not a biologist. Okay. And I don't want to go, I'm a price action guy. I'm pattern recognition. I'm a knuckle dragging trader. I like moving averages and trend lines. Right. I feel, my mind is wide open in terms of what we're going to see, because I feel like I see the economy changing around me, like morphing on a super quick basis.
Yeah.
Like where services markets are changing, manufacturing markets are changing. There's supply chain issues. There's so many variables that I would never rule something out like that. We can't see quiet manufacturing growth without sparking an inflation buzz. I feel like that's possible. So that's like my only explanation. I don't want to go too deep into it because I'm not a biologist.
I'll go. Did you say gynecologist? What did you say? You're not a biologist.
I'm not that either.
I'm
not
Whatever.
that
Yeah, I'm neither of those things. I'm no
That's
biologist
fantastic.
in any sort. But I will say this is that, okay, so when we started the whole hiking cycle and trying to drag liquidity out of the market, M2 money supply fell 4.6%. Most of that was because of QT and the Fed, draining their balance sheet down. Well, since May, where the Treasury has started issuing a crap ton of short end bonds and foregone the long end because of fear, in my opinion, they've been zapping money out of the repo market. That is essentially boosting M2 at the same, because that money is not counted in M2 and it's sitting in reverse repo. They're boosting M2 by injecting it back in the system at the same time the Fed is draining M2. And that's why we've seen an absolute flat line for 6 months. I think that has to be accounted for. And if they continue to do that and drain money out of reverse repo and keep the M2 from really collapsing, then it should run out at about April to May of this year. Let's say June, just to be safe. When that happens and M2 money supply starts to fall again, I think the Fed is going to be forced to either defend the dollar or defend the economy. And I think it's going to be a tough thing for them. I think they're going to start QE again. What was the question again? I forgot where we started.
I don't know, but I'll add to it. I think two of the reasons why the question that I asked, can we see higher inflation and still see a higher stock market?
Yeah.
I think the answer Tony's right on is yes answer, because people forget inflation is not bad for stocks. Inflation is asset inflation as well most of the time. The only time it's not is during stagflation, which the theory I'm working on is that regardless of where price inflation comes in, the Fed's going to cut anyway, because the only time that stocks underperform is in stagflation. So they need to cut rates to make sure growth, GDP, stays up. Inflation be damned. And this is where we call them political again.
Yeah, well, because they are political. Tony, you in your note, you mentioned liking uranium, right? I read that correctly, correct?
Mm-hmm.
And I have in my slideshow tomorrow for the speech I'm giving, I have uranium against lithium, which I think is a fascinating chart as well, too, because it really tells a story about where we're pivoting to power-wise. Do you have a fundamental thesis for that, or do you just think it's the Momo play?
Yeah, it's kind of the supply demand story is if we're going to have 160 million pounds of production in a year and we're going to require about 200 million, we're running at a pretty big deficit. So, and that's just kind of Cuppy's math. I follow his lead in terms of like the fundamentals of the story a little bit. It's getting popular on Twitter, which is not fun at all. It reminds me of Bitcoin when it was at 70K. And the bulls that are in the trade tell you that it can't go down. And like you say that to a trader, and a trader goes, "Sure,
Bullshit.
It can." Yeah, you know what I mean, right? Because eventually something is going to happen, and I know, and we don't know what it's going to be, and there's going to be all the uranium that you want. Right. Yeah. And we're going to be into the volatility side of the trade. So I'm kind of cautioned. I'm a little freaked out by their kind of like laser eye uranium traders on FinTwit. But I think the supply demand story is right. I think the fact that for me, it's also a little bit of a fade, the push toward electronic battery power everywhere. I feel like that the cat is out of the bag with the inefficiency of, wind and solar and things like that. And it's just drawing more attention. And the whole world is like, well, what about uranium? We've got all we need right here. Or at least, the utilities are burning it. We can go in that direction. So I think it's just something that's going to be more widely uptaken eventually around the world. Like I could see it having creating a much bigger percentage of global energy, bigger than, 15% around the world and maybe 15 to 20% in the US. So I think that's going to grow. Its usage is going to grow. I love that it's a fade on, or at least the behavior has been a fade on electric battery power. If you notice those, uranium is doing great while the solar sector is coming undone this year, which is not surprising. So, yeah, I think that it's got a good, I like the metal itself. I think the Sprott Uranium Trust is a better investment than the miners. It's exciting that Sprott Uranium Trust can go parabolic. The miners are struggling to get through that old 30, 32 high, which is a little bit of a divergence, kind of caution to me. But I think it's going to be a sector that's going to be widely in play, fun to be involved in. We've got to listen to the industry leaders like, Uranium Energy Corp and CCG Cameco, and we'll see where it goes. But it's going to be like anything else, where positioning is going to get long. We're going to get at the highs. There's going to be no further catalyst. It's going to back off, and we're going to trade into it again. So it's a really exciting bull market, if you ask me.
So Tony Greer, the non-trader, Tony Greer, just the guy, thinks that nuclear power I
don't think that guy exists. He's always
we all have that guy who just thinks about an opinion that's not market related, that nuclear is the way. Like that, we had Doomberg on this. We had Josh Young on our podcast. They all say the same thing. Like God gave us this power that was essentially clean as a whistle. We now know how to deal with it, and yet we're still acting like we need this other invention. You agree with that, right? So the other thing I was going to say, then we talked about when you say to a trader, can't go down the fundamental story, we'll bolster this forever. People don't know that market position is such a huge thing. we were talking about Bitcoin on the Tradier rundown, which is just before this show. And with the classic buy the rumor, sell the fact, for a year, people are buying the rumor on Bitcoin because the SEC is going to approve the Bitcoin ETF and it's ready to launch. And then all of a sudden it gets just caned. And the reason is that everybody gets in and they're looking for that pop. People don't get that. So the question becomes, when is that going to be happening in uranium? What will be the clues that you get that it's about to roll over? Or do you even care? The fundamental story is so strong.
I'm paying attention to all the clues, man. As a trader, your sentiment meter is like, wait a minute, the boat is crowded, right? Like, right away when you look around and your boat is crowded, and when it's empty, right? So when the boat gets more crowded, the thing, it just reminds me of, the bulls were in my face on Saturday morning when I was online to get bagels about Bitcoin rallying, right? And you're like, okay, it's tremendous. Congratulations. Just remember, for someday, trees don't grow to the sky, and neither do markets. This thing, 100,000, there's nothing stopping this thing. Okay, just remember, trees don't grow to the sky, right? And maybe that's useful someday. I know it's no use to you now, again, while I'm online trying to get bagels on Saturday morning, getting harassed by Bitcoin bulls. And if you saw what happened, 70K, 17K.
Oh, yeah.
Right. It's eventually something is going to happen in uranium. Altitude is everything, though, right? We're just above $100 a pound uranium. I don't know if the slide is from 200 to 100 and it gets halved, or we trade from 110 to 90 or something like that. And that was the slide. And if you didn't get in, you missed it. So, there's so much fundamental bullishness, but the more that creates buzz and the more that creates attention, the more positioning is going to get lopsided. And then it'll probably the miners that go down first, and then everybody will be holding the uranium bag saying, well, maybe it's worth hitting a bid in the commodity too. And like I said, I just don't know where that's going to be from. But like I said on another podcast the other day, that I got my arms ripped off by the uranium bulls. I'm a bullish seller, right? And like you said, it's like I can be bullish the idea, but I can be on the lookout to make a sale because I don't want to have a full position at the highs. Isn't that fair?
It's
right.
fair as
So
hell.
that's kind of how I'm looking at it, if that's fair.
It's interesting. The Bitcoin thing, to me, the buy the rumor, sell the fact, like we all know that cliche. It happened a fucking again, right? It just keeps happening. I mean, Jimmy mentioned, what was the one you just mentioned, Jimmy, where something was going up, then everybody waited for it, came back down. Might have been Bitcoin.
Yeah.
Happened in Pfizer too. Remember Pfizer? While they were awaiting the emergency use authorization for Pfizer, I got a bunch of we had a service at the time, and I got a bunch of people in Pfizer about a month or two before that last pop. And then we hit our target. We got out. Everybody's like, it didn't get the approval yet. I'm like, I don't know. We hit our target. I don't know what to tell you. Like, we get out at our targets. That's it. We do price action, right? And a bunch of them are like, I'm going to hold.
You
and
do
then
that.
literally 4 weeks later, I'm getting all these emails. I should have gotten out. It's so funny how, okay, now I'm starting to talk instead of ask you a question. Let's go to gold, because you also like gold. And I'm curious if your stance is an investment. You said you're a trader. Is your stance an investment, or is it a trade based on the Fed, or is it the charts, or is it all the above, or something I'm missing? Because I'm long gold too, by the way.
Yeah, totally fair, Bob. That's totally fair. My view toward gold is, very broadly speaking, own it for monetary insurance and own physical, right?
Mm-hmm.
That's kind of my broad brush take on gold that never goes away. That's a view that I think that I'll probably die with, right? You should own physical gold as monetary insurance. In terms of the trade now, where I have it on the pad as a position, I do think that it's in good shape, right? I got into it before it cracked to the all-time high, so I've been in it and riding it higher, and didn't just get in above 2K or anything like that. Now, the price action has been sketchy since we made that 2135 high, right? We made three lower highs, and it's kind of been offered back into the old range. That is definitely a concern. Unless it curls over below the moving averages, I'm still staying gung-ho bullish, because I feel like the atmosphere is one such that central banks are selling U.S. treasuries, broadly speaking, and diversifying right into gold, broadly speaking, right? We saw a lot of central bank buying last year. That seemed to be the bid in the markets. Higher interest rates is kind of a bearish thing, right? It widens out lease rates so producers can sell gold at a higher rate in the future. So I still think that gold is going to go now. It's going to go now that we broke through that high. I think it goes back to being a slow moving grinder that is sort of a fade on, central bank profligacy and political irresponsibility. And I think Bitcoin can be the same type of trading vehicle. And I feel like, in a world where the BRICS are trying to create their own currency trading with commodities, that's to be respected. I don't think that it's going to derail the dollar, but I think that that's just sort of sentiment wise, that's a sort of credibility blow to the US system a little bit. And so that's why I kind of like staying with the gold market right now, if that's fair.
It's interesting. And a quick follow-up. Jimmy and I both own physical, right? And we both also own guns and dogs. So don't get any ideas.
You will wish you didn't get by the dogs. If you get by the dogs, you'll wish you didn't. Okay.
This is for everybody watching. But we both own physical. So we're sitting here, and I actually wanted to prove to a friend of mine who's just the biggest Bitcoin bull ever. And I've owned Bitcoin too. I've made a lot of money on Bitcoin trading it. But he said, why gold over Bitcoin? The technology, this and that. And I said, I'll prove to you why. Call me tomorrow, right? And he called. And by the way, this happened to me near the highs, which I was very proud of. But so he calls me up. He goes, okay, what? And I said, let's do FaceTime. We FaceTimed, and I showed him a lot of cash. I go, I just went and got this yesterday afternoon. I sold 2 gold coins, and this is what I got. Okay, now Bitcoin. Go do the same thing. Call me tomorrow. It's like, well, it's not that simple. I got to trade out of it, blah, blah, blah. I said, exactly. Bitcoin's an asset. Gold is money. It is absolutely money. And to your point about it pulling back, I am buying gold.
There seems to be a strange woman in my hotel room walking behind me. Anyway, go on.
It better be your wife, man. That was live. We can't edit this out.
Right. It's live.
The point about gold, man, I'm buying gold all the way to 1955 and probably lower. Because this, to me, like this sell-off that we're getting now, you'll pull up a monthly chart. It's going to a great level. It's going to a great level. I think it holds up on. But I digress. Why do you think that CNBC and others, and this is one of the things, Jimmy, I'm pretty sure that they had on the list of reasons to kick me off CNBC. I was required to talk about gold this day, and require is the right word. So I talked about it, and I actually wanted to be long it. Oh, I'm sorry, it was crude. I wanted to be long it. And they said, okay, so which energy companies are you looking at? I said, none. I said, I'm looking at the actual futures contract. And in your point, the ETF, the USO, whatever you want to be. And they said, well, you don't want to look at like Valero or I go, no, what is 100% correlated to crude oil? Crude oil. So if you have a position in the actual an opinion in the actual commodity, why wouldn't you find the best way to express that opinion in the market, which is the actual commodity? So why do you think a lot of stock guys, because that's sort of your background, right? Mm-hmm. Look toward the stocks, the miners you just mentioned, as opposed to the commodity?
I got to tell you, man, I think it's just their belief that people get excited about exploration and new discovery and new assets and things like that. Bob, I was just like recently, I was at the global gold conference in Beaver Creek, Colorado. And it's really, it's an amazing community. They're all unbelievable. It's like a subculture, right? They're all kind of unanimously bullish gold. They get so excited about new developments and new exploration and new resources, et cetera, et cetera. And I'm like, why do you guys get so excited about this? Because you guys are the only ones that get excited about it, because the market doesn't really value them right now. If you look at where gold stocks are trading versus gold, they're falling off a cliff, and I still think that there is some belief in that lottery ticket. The more I talk to these guys, they don't look at these trades like, this is going to outpace the S&P. They look at these like they're going to be 10 baggers one day, or at least a couple of the names in their portfolio are going to be 10 baggers one day. And I'm saying, like, it's a pretty simple business model, and Newmont Mining is the same price as it was when I was in high school. So how is that possible, right? Like, what, where's the upside in gold miners? And they don't really have a good answer. It's just this belief that the miners, the junior miners, there's going to be new development, new discovery. And, it's like that eureka gold out of the ground thing. So, I don't know why. I'm like you, though. I'm the first one to say, make sure if you're bullish the commodity, you're in the commodity. I mean, if I'm bullish a commodity, I trade the futures contract, right? And that's it. I don't even dabble with the ETF if I don't have to. And I still think that there are people that aren't comfortable being long the metal itself and are just like the stock market and would rather be long the mines, and they're married to them, and that's it, man. I think it's like, it's a little gold buggy subculture stuff.
Yeah, we are live, and we did get a viewer question. I think you kind of just answered it, but I'll ask it anyway. Carl, I can't pronounce the last part of this particular handle here, but Carl something 2525. Does Tony like the miners? I kind of feel like you answered it, but go ahead.
Yeah, put it this way. I do trade the miners from time to time on a technical basis. They behave fairly well technically from time to time. So that's when they're in my pad as usually a long. I'm usually not fading them. I'm kind of figuring out where they're dirt cheap and have a chance to break higher. So I use them as a trading vehicle. Do I hold them in my longer term accounts? I don't have any in my retirement accounts. I don't have any high hopes for any small junior miners or anything like that. So no, it's not where I really bread my butter generally.
So one thing that I love when we have takeaways from the show, I thought you were going to answer Bob's question about the miners, about the stocks, that just people who trade stocks, that's what they know. So they go to that. People who trade futures. But that's not the way you answer. You painted a subculture of people who are literally digging for gold in the minor stocks. You know what I mean? It's such a beautiful metaphor, I think. And I will look at that. But one thing I want people to remember too is that when you buy the miners, you're somewhat buying a leveraged play. They have fixed costs. It's kind of, but so you could buy the futures. The futures is a leveraged play as well. So, I mean, any argument for that, yes, you could make a lot of money if the price of gold goes higher and they're highly correlated to that, or if they have some big discovery. But the adverse is true as well. So my question, I just want to pivot back to uranium. And again, I'm wearing a CME sweatshirt. I've been a CME member for 37 years. Do we have a good uranium contract? Does the CME or does somebody?
No, not that
How
I
do
know
you
of.
trade uranium? Just Sprott?
You got to go Sprott.
Sprott, there's a weekly price that registers on Bloomberg of U308 that I think is accurate, seems to line up with what's in the papers, and it's weekly. So, the transparency is not there for me. This is not crude oil where I can look up a number of exchange prices to get a handle on what's going on in the crude oil market. It's really, really opaque and hard to follow. And, that's why it feels a little bit like Bitcoin to me.
Okay. And I wanted to your answer when you were saying about central banks buying gold, about the BRIC currency too. I think what you're saying is what I say too. It's not necessarily, we're not saying it's a knockout punch to the dollar. We're not hyperbolic like the dollar's going to shit. What we're saying is the dollar's getting a little bit more tarnished, and other people may think the dollar's going to shit and may make trades accordingly. Correct?
They're doing their own thing. They're just going away from it, right? And to me, that's a credibility blow.
Okay. Yeah, I agree. Do you want to hit crude oil at all?
Crude oil, I don't have a dollar of risk on my pads right now, Jim, and that's the commodity that I'm most comfortable trading. I can sleep at night with a big crude oil position and not be worried when I feel like I've got a handle on the markets. Right now, not one of those times.
But
right?
just can you go into, so what are the crosswinds that are mixing us up? Because I agree with you, by the way.
Yeah, so we just came out of the back and forth between the Biden SPR seller and the OPEC desire to keep the prices supported with output cuts, right? So the Saudis finally had to give in, right? Because they just lowered prices to Asian customers. I'm sure it was very reluctant. They've been keeping the premium over there longer than I thought was even possible. So they had to just lower prices. That hit the whole oil complex. Oil went down 5% in one day when the news came out. So to me, that was a little bit of a throw in the towel on the Saudi part for the short term. In terms of, we got that pop to 95. It peaked out on the Hamas attacks and went straight down from there when everybody in the world, including me, thought that it was 100 bound because we had this Middle Eastern cauldron bubbling, and now all of a sudden there's actual bloodshed. So since then, the oil market, the gold market, and the treasury market have been pricing Middle Eastern conflict at zero, precisely zero. I mean, there's Houthis, rebels attacking Saudi, refiners, and the oil price is moving, right? And so it's like, okay, I get it. It's not going to be a headline-driven market like that unless something really bad happens, which we're hoping doesn't. And to me, it just looks like the forbidden fruit trade where something trades up and then back into its recent range and everybody wants to buy it in that recent range. And you look up one day and there's a $10 spill and everybody's like, oh shit, what just happened to oil? And I'm not even saying I think that's going to happen. That's why I'm not in it though. That kind
Bobby,
of thing,
I want to get your take on oil too, but then remind me
Yep.
that I want to get back to the Magnificent Seven because I have a question about that. It's going to be a brilliant question. It's going to knock your socks off. Bobby, what do you think about
I'll
oil?
remind you.
Brilliant. So also crude oil is the thing I trade the most. And I have a lot of opinions on it. And most of them lead me to a lower price, but not from here. So it's interesting because I don't have a trade on either, which is unusual. And part of the reason is because, and Tony, you know this, and Jim, you know this as well, but for people watching, crude oil is one of those markets that has a very distinct characteristic where it moves in a sideways channel until it doesn't. And that sideways channel is when the market is pretty sure of where supply and demand sits. So right now we're in a bit of an oversupplied market and we tend to hang out at the lower end of that 67 to 75 channel, but the top of that channel is about as high as 84. It's about a $17 or 25% channel, right? And even if we go to that top of that channel, the last time we was the one Tony just mentioned, the spike, and we broke right back down in that same channel. This channel has existed since November 2022.
Mm-hmm.
So I can't really get excited about much. I don't try not to trade these things intra-channel. But from the perspective of the last OPEC report, if you've been reading OPEC reports as long as I have, and I'm sure Tony has, you realize that when you compare it to, say, the IEA or the EIA reports or any other outfit out there that covers crude oil, OPEC tends to be bullish price in their reports. They weren't. They were talking about increased demand, but also increased supply from OPEC competitors. So what do you do when OPEC, the ultimate oil bull, is not bullish? You stay away.
Yeah.
Because again, then you're only talking about supply disruption risk, and it's impossible to price that.
That makes sense. Okay, good. Good. So I did remember my question. So one of my concerns about the stock market is that the leadership has been so narrow. 7 stocks have done a majority, and not majority of the heavy lifting would be hyperbolic, but they've done a shit ton, a metric shit ton. But anyway, so when they go to turn, I think that could be, because I still believe that the thing that's going to push the Fed to move in 2024, I think it's going to happen in the first half of 2024, is going to be a quick backslide in the stocks, maybe to the tune of 10, 12%, like a nasty one. I'm still a bull for 2024. It's not that unusual to have 10% slides in a year. And I'm positioned for that when they were giving away cheap options. So let's say, what are we going to look for in the big 7? Is it just Apple? Or are we just going to chart that, and when it starts to turn, or what is it?
Man, it's a tough one, Bob. If you ask me, there's too much tailwind for that sector right now. I always go back. I keep going back to a 94, 95 analog for the stock market because I got annoyed that all I was seeing were .com bubble and great financial crisis analogs to the stock market, because there are people that are saying, remember, guys, during those crashes, rates were going down and we're about to start lowering rates. That's fine, but rates were going down then because of what was going on in the markets, right? The world is so different now than it looked like in the .com bubble and during the great financial crisis. To me, I mean, there's no banks lending over their skis to hairdressers in Las Vegas so they can have 11 spec properties. Like, that's not going on. Right. And nobody on the street is long those securities. So I don't see that. I see it a lot more like 94, 95, where in 94, we had to raise rates from 3 to 6% to deal with a little bit of inflation and an overheating economy. Stock market was down 1.5% in 94. In 95, 96, 97, as you remember, rates, Fed funds were like 5 bit at 6%. They didn't budge. And the stock market had all of these technology tailwinds like we have now with AI and cryptocurrency, in my opinion. And there was just no stop in the markets. And that's kind of what I feel like we're set up for now. So what are we looking for is a lot more in the yield curve in the bond market and rate of change there, rather than, and that potentially drawing sellers into the big Mag 7, rather than Mag 7 kind of turning on their own and falling over, right? A lot of people were underwater in a lot of the big tech stocks. They got their money back last year. And now it's like a position of strength going into this year for the technology holders. So I'm hesitant to fade that. I'm more than happy to trade a dip, but I'm hesitant to fade that strength right now.
Bobby?
Yeah, to that same question, I'm a buyer of dips in that area, but I'm also a seller if I've been long for a while. Certainly not something I would short, but in that vein, so you talked about the yield curve, right? And the inversion, which obviously we've had it for the longest period of time, and it was also the deepest in a half century, right? And 2 days ago, we had a -17 settlement on the 2s10s, which was the highest settlement. Still have trouble saying that because in October 26th, it was 16, which sounds lower to me, but it was the highest settlement that we've had since October of last year, where we had a -16 settlement. And one of the things that my partner, Mike Arnold, who's been on both our shows, did a little research in that. And he said that the bottoming of the stock market typically happens after the yield curve uninverts and goes and normalizes, right? And this is why I so much support what you're saying about 94, 95. Remember, everybody, at the end of 94, 95 came 2000. So it's not to say that we go up for 40 years after this, but the normalization in the yield curve usually leads to the bottoming of the stock market, but it doesn't mean a collapse of the stock market. It just means a medium to long-term bottom. So if we continue like this and the yield curve uninverts, that tells me we're talking about a 4 or 5 year bull market. Does that sound obviously doesn't sound nuts to you, but how low could you see equities going if I were wrong about that? Do you see anywhere where there's just like, it's not going below here in the next 6 to 12 months?
Yeah, I'm a believer in the shallow dip mentality myself. I think that portfolio managers are now in a position where, we're about to notch January on the books, right? You got stocks like Nvidia up, 15, 20%, whatever it is. You've got cannabis up 20%, uranium up 10%. There's going to be some kind of like performance chase issue at some point where they're like, we got to get into this. So I think that that's going to drive things at the beginning of the year that sets us up for follow through there. So I think that if you're rationally trying to trade this market as a portfolio manager at the beginning of the year and you see that you're not fully invested and it's at 4,900, I'm kind of like, at 4,700, 4,750, I got to get into this market if I get that chance. So I'm kind of that around there, like, around that area is where I really would love to see it get in an all out puke kind of for the health of the market. That's where I'd like to dig my heels in. And I don't think it gets much below 4,700 this year.
Wait, did you say cannabis? I thought, is cannabis been ripping? It's not been my radar screen at all. And I know that I bought some and put them somewhere away like dirt cheap a while ago. So I should be checking my portfolio, my cannabis portfolio now.
That was actual cannabis you bought, Jim. That's what
that's what you're storing away, Jim. Right. No, you should. I mean, it's worth watching, they're going to come to life at some point. And I like the rescheduling and I like what some of the CEOs are trying to do. So, I mean, they just can't get any help from the government. The government keeps pulling the football on them with safe banking. And I think that that's why everything is delayed. It's a disaster.
It's funny as far as the cannabis use thing goes, is that I've spent my, and I was born in 1965. There's pot everywhere in the 70s and 80s. And I would smoke pot, but I hated smoking pot and I hated being stoned. I like to have control of my words. But like a year ago, I started using a little of that indica for sleep at night. I take it at about 8:30 or 9 o'clock. About an hour later, I sleep like a baby. It is amazing. Like if anyone who takes Ambien, again, I'm not trying to do a commercial for pot because like I said, I don't even like being stoned necessarily, but I've been pretty much a religious believer in it. Are you comfortable talking about it? Do you use the product?
Absolutely.
Anyone?
Absolutely. It keeps him away from alcohol. I think it's great.
Yeah. And alcohol. No, yeah. Nobody smokes a reefer and then, beats people up. Alcohol makes people angry. It seems like. Robert,
I feel like you're looking at me when you say that because I do like bourbon.
I've drank alcohol and fought people many times.
I do like bourbon, and I have been called a mean drunk. But for sleeping, there's nothing better. I swear to God. I mean, if you get the right gummy, which I can't take the smoke in my lungs. I just can't take it. I've never been able to get used to it. I smoked for 2 months when I was in like 8th grade. My dad beat the living hell out of me, and I never smoked again. So that was an easy one to quit. And then, I just friends would give it to me and I'd be like, oh my God, this is awful. How can you do it?
Yeah.
And then I would get paranoid and think someone was coming
Yeah,
to
I
me.
don't like it.
Me up.
By the way, I just remembered
But
that this
also-
technically isn't our podcast. This is Tradier's podcast. I hope they're not going to
Yeah,
get pissed. We're talking about
yeah,
this,
we
right?
should-
Lex would never get pissed about that, right?
Not Lex, no.
Right.
So last market-based question for me, Jimmy, you can take over from there if you want. When you look at sectors now, it seems to me like your opinion is sort of a new reflation narrative for equity markets, right? Where you're basically getting a tailwind on both potentially economic growth and stocks as well. And again, if we get a resurgence of price inflation from a stock market perspective, so what, right? I mean, that's asset inflation built in.
Mhm.
So do you see any particular sectors that you want to be in? You talked about the tailwind potentially for the glorious seven or whatever the hell we're calling them. And you said AI is too dangerous to short. What is a sector no one's looking at that you like?
Well, one that we haven't discussed that I kind of like is I can get behind industrial metals. You know, XME is it's been sideways for about a year and trying to break out of the top side of this range. It has to obviously it has to do a lot with gold breaking above 2K and trying to stay there. But you know, we just got to. It's interesting that we finally got a move out of copper. You know, China is obviously going to have to do something about their collapsing economy, stock market, capital flight, the whole thing. And I just feel like if they decide that this year is the year that they're going to put the brakes on that, you know, so they don't look too weak going into the US election year, if they're going to put the brakes on that weakness and stimulate, they're going to buy base metals hand over fist, and the markets are set up so that they're kind of vulnerable on the upside, even though there's been no like excitement there. I think that if China just started taking over and stimulating, that base metal markets would come to life. And I think XME is a sector that it's kind of like my dark horse right now, if that's fair. You know, I don't think that it's going to go run away, but it's one where I'm saying, like, I think I want to start moving money toward that sector. I like the breakout in Freeport with this move in copper now. I mean, that's like an age-old song, right? Saying that Freeport is breaking out with copper. But if they get going and going together, I think that XME can run, and it's based on, you know, believing in slow-moving strength in gold and the fact that China may have to stimulate a lot harder than the market is anticipating right now. And that usually means, like, you know, stronger yuan, weaker dollar, and next thing you know, base metals are a lot higher. I have a little bit of dollar down bias this year, just from, you know, just from the charts. If we're going to lower rates this year, the dollar is likely to go lower. I mean, it's scorched higher when, you know, as we were raising rates. So I feel like a weaker dollar will potentially lead me. I feel like there's a few things that will give me some tailwinds in XME, so I can be in a sector that's positive and sort of keeping up with the S&P, if not keeping up with the tech market kind of thing.
So I have silver and I have platinum and I have Freeport. I don't make recommendations on stocks. My licensing is for futures people. But anyway, so then my lawyers have to watch every show that I do. But anyway, I have silver and I have platinum and I have the copper. And, you know, we talked about gold Doug's before. Can you make an argument for silver or platinum, in particular silver in the industrial space? Or do you put silver, is silver 80% precious, 20% industrial, or what is the ratio?
Silver is hands off for me, Jim. You know, I give it a little bit more precious. Yeah, it is. I give it a little bit more of a precious metal rating than I do an industrial metal rating, but it's, you know, it's getting there. My point with silver is I don't like to trade commodities that have a Loch Ness monster in them. Right. And what I mean by that is there's a lot of people that believe that, you know, there's a huge London bullion short in silver and that the price should really be, you know, double, and maybe all that's true and stuff like that. I just can't traffic in markets where there's a, you know, a group that thinks that there's all kinds of chicanery going on and it's all fake. Like, I just don't believe in that, right? Last sale is king to me. And if there was really that much silver missing from a London vault, the price would be higher. You know, I don't know what to tell those people. So I continually see traders get disappointed in silver. It's like kind of like watching somebody go up to a stove and burn their hand and come away with burnt fingers, and then just go up to it again and burn their hand again and look at it and expect a different result. But I feel like that's how people trade silver from the long side. And most of the time, nobody knows when to sell because they all think it's going to the moon. And then it goes back to where it started from and everybody loses money. So I've seen that unfold so many times that I feel like it's set up to do that again, that I'm just not interested in that commodity. Platinum group metals, another story. I mean, if you can find good ways to latch onto them, those can trend for years and years and years. There's huge industrial uses, likely to be more. I mean, those are at least markets I can get behind. Silver, I have no idea. No idea.
You know, I do actually have one more for you. Can you explain to people your process? You mentioned you're a price action guy, and really Jimmy and I are as well. I look at the fundamentals as a hobby. So as much as you're willing to share, because you do have a service and people can find it, the Morning Navigator, you can find Tony there. Go through a couple steps in your process of what you look for.
Sure, Bob. One of the things I've done that has served my trading miraculously since I started working for myself and not for anybody else, and not have to report to, a head of sales or anything like that, or head of trading, and I can focus on the markets the way I want to. I built a spreadsheet where I can follow the closes of markets, and I look at the closes like 4:00 every day is when my sleeves are rolled up to my armpits and I'm looking to see what happened that day and taking notes, right? So I look at closes on a daily, weekly, monthly, quarterly, and annual basis really regularly. Right. And so what winds up happening where I get an edge is I'll be following, on my spreadsheet, and just notice that this sector has been positive 4 weeks in a row. Tape's been up, tape's been down. This sector has been positive. So all of a sudden it's glaring at me. Right. And more times than not, believe it or not, something as simple as that turns into something. And so I have all my notes about all my leads and about all the things that I notice about price action. And when I overlay those notes onto a technical look at the markets, right now I've got the notes that I say, okay, this is what happened this week in the market. This broke out, this broke down, this moved in large magnitude. Let's see where they landed. Right. So that's when I go to my technical process and just go over the charts like an everyday Joe. I'm a trend line moving average guy. There's nothing fancy to my technicals, but I pay close attention when something breaks range. And when that security that was up 4 weeks in a row just broke range, I start moving money towards it. Right. And the next thing you know, there's a large magnitude move there that's kind of confirming everything that you saw. And that's another signal to move more money toward that trade. So everything is watching the performance, because everything is a horse race to me. Like I start off the beginning of the year chomping at the bit to try to figure out what sector is going to win at the end of the year so that I could get my clients in as early as possible. So I'm always looking to surf that sort of who's going to win this horse race at the end of the year. And sometimes, you get signals by the first or second quarter as to how it's going to go. And that's a little bit of sort of just kind of giving you an intro to my process. It's really studying daily, weekly, monthly, quarterly closes and see where they land.
So it's interesting. It's one of the best things I ever learned from my partner, Mike Arnold, and Jimmy knows Mike as well, is that, on a chart, a bar gives you a lot of information, but the most information you get the most important thing you get out of a bar is the close. It's literally like the final score of the game.
Why?
It's literally.
Can we explain? I know I
can tell you why I think, and Tony, if you agree or disagree, why I think.
Go ahead.
Whatever time frame you're looking at, whether it's a 1 hour, a daily, a 4 hour, a weekly, whatever, all this trading goes on. And everybody trading in there, every institution, every individual, every family office, every insurance company knows what time it closes. And the price that closes, that's where they all agreed it should be.
But by the way, not that we need to know why. As traders, all we need to know that it's true. Like Mike Arnold always says, we don't care why. But Tony, do you like that answer?
Yeah, I'm cool with that answer. I just had somebody today say, like TG, you said you liked XYZ security if it closes above this price. Oh, this is what it was. This is how the conversation came about. You like Bitcoin if it closes above 41K or so, right? You would go with strength. I go, yeah, that's true. But I go, it's 10 o'clock in the morning. I go, let's look at Bitcoin at 4 o'clock. And one of my clients comes in and says, Tony, why is 4 o'clock? Why does 4 o'clock mean anything to you when Bitcoin never closes? I was like, I got to make a daily bar chart somehow. Yeah. I've got to figure out where the daily closes. I need to take a snapshot at some point and say, okay, this thing is done, timestamped to this point in time. So I just timestamp it to where everything else gets timestamped. At 4 o'clock on Friday, that's where Bitcoin closed. I don't care what anybody else says. So that's kind of how I look at it.
Other people do that too, though, probably too. So it actually takes on a life of its own and becomes real.
It probably does. It probably does. Because if you follow Bitcoin on Bloomberg, you see that on Friday, if you look for weekly closes, you get updated weekly closes and everything. You don't get any updated weekly close in Bitcoin until Sunday. And to me, that's garbage. Like, there's no way that I'm letting that stand.
Yeah.
Okay, so what else do we hit? Are you do you have children?
I have 3 teenagers. Yeah, blessed as could be.
That's fantastic. That's awesome. Babe, everyone said the teenage years suck. I thought the teenage years were fun as hell. Yeah.
They're spectacular. I mean, like my girls got out of their stage where they weren't talking to me. My son is one of my best friends in the world. I mean, it doesn't get any better than the teens.
Does not get any better than the teens. And now that my girls are adults, it's quite a bit of fun, but it's a different kind of fun. I don't see them. My one daughter and I text every day about sports. The one who's getting married. The other and I text every day, and we throw barbs back and forth at each other. And she lives in California for now. She's supposedly coming back, but anyway. All right, this has been great. Was that your dog barking too, by the way?
That is
mine.
my English lab was barking too. I heard Bob's also. Yeah, we got a couple in the background.
Bob's your dog was barking too. Right?
I should have warned you guys. I don't know why, but these workmen always say this is the only time I could come. And I'm telling you, I told the guy, do not knock on the door. Just do your work. If you got a question, you got to wait till 5 o'clock.
Yeah, we're working here. Right. All right. Thank you so much, Tony. This has been great. So people, where you can find you on Twitter is TG Macro is your Twitter handle, correct?
Yes, that's correct.
Your morning newsletter is called The Morning Navigator.
Yep.
And I think you're brilliant. I think you have so much to add to the conversation. I really appreciate it.
It's too kind of you, Jim. I'm really honored to be on the show with you and Bob. I watch it all the time, and I'm just great to be on this side of the microphone and camera for a change, man. It's great.
Thank you.
Thanks, Tony. That was great, man. Thank you.
You're very welcome.